Right. Assalamualaikum warahmatullahi wabarakatuh. So this is the tutorial on account receivable that not been discussed in class. So I will discuss it in this video. Just an explanation in this video. Hope it will help you to understand the question and the discussion. So this is the question, guys. Okay. So we see this question. We know that the question give us a trade receivable 53 million this question, and the bad and doubtful debt which is equal to allowance for doubtful debt. Okay, so in this question we see the question like this is what we need to do, allow a bad and doubtful debt, so which is allowance for doubtful debt. This one is similar to allowance for doubtful debt. Okay, so now yeah, this is just to highlight that this is allowance for doubtful debt. Okay, so now to highlight that the credit sales amounted 1.5 million. Okay, so first we put the beginning balance here. It is a normal balance. The question did not mention anything. So we assume it is a normal balance. Normal balance for allowance for double debt is on credit side. Okay, because allowance for double debt is a contra trade receivable. Trade receivable is asset. Asset normal balance is debit side. So contra to debit is credit side. So credit sales amount to 1.5 million were finalized on 20 June 2018, but the customer requests the good to be sent on 25th July 2018, right there. So we know that uh, the sales is complete already on 20 June 2018, but only the customer requests us to send on 25 July 2018. You see, the sales is completed on 20 June 2018. The control of the good is transferred already to the customer on 20 June 2018. We should recognize this as our sales already. We should recognize this as our income already, revenue already. Even though the goods is sent on 25th July, but that one is based on the control of the customer, not us, right? So the customer is controlled already on the good after 20th June 2018. So that's why customer can request good to be sent on 25th July because the customer is the one control. So that's why we record still on 20th June, which is before the year end, before 30th of June. So therefore, it is included, should be included, but this month is not been incorporated, so we need to include it later, right? So on 1st of January, 1st of August 2017, owing Amber 350,000 was declared bankrupt. Bankrupt means that cannot collect anymore. Amber estimate that recover only 10%. So out of 350, only 10% the customer can pay to us. The specific allowance for double debt made is 2% on net receivable. The question mentioned net receivable. Right, so now we see what we can do now. All right, so we know that the balance PD, the beginning balance, which is a normal balance, is 910, right? So the company unable to collect the 90% only, right? 10% can be collected right here. Okay, so 90% from 350 is 315,000, right? So from this 315,000, this one is the one that we cannot collect at all. So we put it here because it is declared as bankrupt. We cannot collect, right? 90%. So we put it there, right? Then 2% of net trade receivable at the end of the accounting period. So mean that the CD or the ending balance, we need to calculate based on this calculation. Okay, this is the formula. The ending balance of allowance for the debt is 2% times the net receivable, right? What is net receivable? Net receivable is basically 53 million original amount, okay, plus we earn 5 million, the one that not recorded yet, but we sales already, we done the sale already, minus with the one that we cannot collect, this one. Okay, if 315, how do we record this 315? We are going to record as debit uh, allowance for the whole debt and credit accounts receivable. You see, the word is accounts receivable on credit side. That's why we need to minus accounts receivable. And we get the answer after times with 2% is 1,083,700. That is our ending balance. So we balance this account and we get the balancing figure of so-called, or this is what we call as bad debt expense. Okay, bad debt expense as 488,700. This is the balancing figure. All right. So, so the next part of the question, okay. the question asks us to from the answer. The question asks us to prepare the extract statement of profit or loss and statement of financial position, right? So remember that if the accounts have a balance, it will go to statement of financial position. If the accounts don't have balance, for example, expenses and revenue, expenses is only here, right? Item expenses, you will go to statement of profit or loss, statement of profit or loss. All right. So in this case, we have statement of profit or loss of 488,700, which is our bad debt, and we have a statement of financial position, which is the uh, this one is uh, trade receivable minus with allowance for double debt. This one is the account receivable or trade receivable minus with allowance for double debt, because we want to get a net receivable. Okay, we want to get a net receivable. You can do one. So next question is the question 2 here. So they give us again similar with the previous question, which is a trade receivable and back and doubtful debt, which is this one is equal to allowance for double debt. Similar, similar, right? So again, the question give us here during the year specific debt proven to be bad. Proven to be bad mean that this confirmed as bad debt. After reviewing the analysis of credit analysis, credit risk of trade receivable, management assess the amount of specific at the end of 356,000. So the question give us already, right? At the end, right? So the question give us already. This one is our CD. Okay. So now we just do this. Okay. This is the beginning closing balance, which is before adjustment. Before adjustment, this will mean that it will become a beginning balance, 306,000. The question also gives us 30,000. So we do 30,000 as the one that cannot proven to be bad. Cannot collect. Okay, then we have ending balance, 356,000. Balance it up, we get a statement of profit or loss, which is a bad debt expense, 80,000. Simple question. And this is the extract statement of profit or loss and statement of financial position. Okay, you see this one go to statement of profit or loss. This one go to statement of sorry, this one go to statement of uh, financial position. Okay, this one go to statement of financial position because they have a balance. This one go to statement of profit or loss. You see, where does this figure we put? Okay, we put under trade receivable because it is a contra trade receivable account. You see, this is our trade receivable. This is our trade receivable, and this is our allowance for the full debt. And the amount that we get here is a net trade receivable. Expenses is here. Okay. So the next question, we go on the next question 3. Again, similar question, similar format. They give us trade receivable. They give us allowance for double debt. At the end, allowance for double debt. Remember, this one is before adjustment. Okay, in August 2007, Coffee Berhad discovered that 50,000 of trade receivable was irrecoverable. However, transaction yet to be recorded irrecoverable mean that not become bad debt. Okay, become actual, determined to be bad debt. Right. So the question also give us the after analyzing the credit risk of trade receivable, management assess the amount of the specific allowance at the end of 2017 is 300,000. Similar comment. This one is CD to the allowance for the whole debt. So we just take the figure beginning balance 250,000 here, normal balance, debit balance. So we put the one that can collect 50,000 here, and then we put the specific of CD of allowance for the product. Balance up this account, we get the SOPOL, which is a bad debt. Again, this is expense, go to SOPOL, and this is the ending balance, go to allowance for the whole debt, which is soft P. Soft P is recorded here. This one is allowance for the whole debt. This two is what we call as account receivable or trade receivable. Okay, same format, same answer. All right. So next, the last one. Okay, the question gives us only a trade receivable here. The question mentioned here on June 2019, the company discovered that one of the credit customer owing 6,000 managed to settle only 20,000. 6,000 managed to settle only 20,000. Mean that what does it mean? Mean that or the different 40,000 is unable to collect. determined to be bad debt, unable to collect. The amount due to financial difficulties faced by the company. So after analyzing the risk of trade receivable, the management assessed the amount of specific allowance for doubtful debt at the end of the accounting period was 500,000. So this one is the CD to the allowance for doubtful debt. Okay, no record has been taken, right? So we just do this. Okay, we don't have any beginning balance, right? The question did not give us any beginning balance, so we put it 0. But we know that we have amount that we are going to return off as allowed as by that here 40,000, the different, right? So then we know the ending balance is 500,000. So we just balance it up and we get a statement of profit or loss, which is 540,000, right? So we put as normal expenses here, and then account receivable, we minus with 500,000 here, 500,000 here. Okay, so you see how to get the 6,610,000 here is after minus the bad debt, Uh, uh, and 20,000 of settlement of bad debt. In other words, we minus the total of 6,000, right? Because 20,000 we still can collect. If you ask me, sir, how to record this 60,000 in debit credit, how can we can record this as cash or bank because we only record 20,000. Another debit is allowance for double debt, 40,000. So we credit our account receivable, 60,000, because the total of account receivable is 60,000. So we transfer here. So that's why both we transfer, both we minus, which is a total of 60,000 here. Right? Okay, that's it for today. This is just a motivation word. Penyesalan terbesar dalam hidup adalah menjadi orang yang lain orang lain inginkan daripada menjadi diri sendiri. Do you notice that sometimes you just want to satisfy other rather than yourself, right? So, right. Thank you. That's it. The short video for this one because the question are very easy and the question are repeated question. Right. Thank you, guys.